For those who are just joining us, my name is Joseline Nicholas, and I'm hosting today's webinar. Before I get started, I just wanted to mention that there's a Q&A box below. And if you have any questions, please put them there. And because we're doing a market update, I would like to be able to speak to your specific situation. So if you're a seller, a buyer, or an investor, please do let me know what you are so that I can answer a question coming from your point of view as an investor, a buyer, or a seller. Other than that, this webinar is being recorded. The recording will be made available. And if you have any questions, you'd like to schedule a one-on-one with me to look at your situation specifically, please let us know, and we'll make those arrangements. So, okay, a little bit about me. So I am a real estate broker, and I am also a full-time real estate investor. I've been investing in this area, Kitchener-Waterloo, Guelph, Hamilton as well. At some point, I was also investing in Niagara for the last 7 years. Right now, I own properties in Hamilton, Guelph, and Kitchener-Waterloo area. If I was to pick a superpower, I would say I'm really good and passionate about building wealth through real estate. And the reason I am very passionate about this is because I've seen what it's done for my family. I came to Canada to study about maybe 12 years ago. And I went from that, being a student, to now having a full-time job in real estate, but also a portfolio. So if I can bring, that to another family, especially those who are looking to build wealth, that is something that I'm very passionate about. Now, today, we'll be looking at what's happening from an interest rate perspective, looking at inflation and affordability. We'll be looking at home prices as well as inventory, the number of homes on market. And I also would like to take time to show you some examples of deals that I am doing right now with my clients, because this is such a unique time. And when I say unique, I just mean it's such a good time to be in the market. And what I mean by that is the market is actually very good. So I will speak to it even as I go through my slides, but right now is that time that I find will take skill and expertise to achieve what you want to achieve. So what I mean by that is, I'll give you an example of a client who just sold in this market. So it's a good enough market that you can sell, but it's also a good enough market that you can buy at a very, very good, you can get really good deals. So I find that to be unique because it's going to take somebody understanding the market and knowing how they can sell your home at a very good price, but also be able to get you a deal. So it's such a market that if I was to talk about balance in our market, usually the true definition of a balanced market doesn't happen in Ontario. We haven't seen it in a long time, maybe even upwards of 10 years. But what I'm seeing right now, to me, is actually a definition of balance, because we have a market where if you know how to work in this market, you can sell and get really, really, from a seller's perspective, you're still able to get good prices. I just sold a property where my client listed for 1.5 and it sold for 1.8. So we're still in that market where things are still selling. But we're also in a market where if you know how to find deals and you're working with an experienced realtor, you'll go out there and you're still able to get a home for way under market value. So I find that market to be such a good market because it's not really too hot, but it's not too cold either. So things are selling, things are still selling for a good price. But if you're looking for a deal and you know what to look for, you can still find it. So to me, that is one of the best markets we've had in a long time. A market that has opportunities. Really love that. So looking at interest rates and what it's been, a lot of people probably already know rates have been going up. Right now, we're sitting at 4.5% overnight rate. And we haven't seen rate hikes in the last few months because the Bank of Canada has paused the rate hikes. The idea is that we won't have any future rate hikes, at least in the foreseeable future. And they have predicted that inflation will come to their targeted inflation rate by the end of the year of 2%. So according to their prediction, we've come down from 8%, and right now we're at 4.4%. What's surprising, actually, and you'll see in the graph that I'll show you in a few minutes, is that it's gone up a bit, but that is not of concern. Experts have explanations as to why inflation has gone up. Last month, it was, I think, 4.2 or 4.3, and now we're up to 4.4. That is not of concern. The experts have a way of explaining what's happening. But what's interesting is that the Bank of Canada predicts that we should be at 3% by mid-year and at 2% by the end of the year. And they're saying that if we get at that targeted rate of 2% inflation by year, they're saying that then they might even consider lowering rates. So we'll see what happens. No one knows, but based on what the experts are saying, rates should come down somewhere around early 2024. Right now, what we're seeing in the market is that activity is picking up. There are more buyers coming to market. This was not the case in December and January, maybe even first few weeks of February, because people, rates were still going up, but people weren't comfortable, making a move. And I spoke to a lot of my clients who weren't ready. They wanted to see where this is going. They wanted to see if prices would drop further. And now we've gotten to a point where people now see that prices are not going to drop any further. In fact, they're going up, and people are coming back to the market. So for those who are looking to sell, that is a good, that's good news, because now you have a larger pool of buyers. But for those who are looking to buy, now you have some competition. So that is where we have to get a little bit creative and know how to still get you a deal in a buyer's market, in a market that is, has more buyers than we had in the last few months. So when we look at interest rates, this graph just shows exactly what I was just saying, where rates were down to 0.25 and now they've come up to 4.5. The reason I show this graph is to show you historically where we've been. If you started with 2000, so right now, even though we say, oh, we have such high rates, but when you look at it, it's actually not a new thing. We've had this situation before. The only difference back then is that home prices were much lower. So if you're paying 5% interest and your mortgage is like 200,000, that was a much, easier situation to handle than we have now, where rates have gone up. All of a sudden, prices are so high, and in fact, they continue to go up. So this is, for me, what makes me believe the rates will come down, because where we have them, it's unsustainable. And also what's interesting is our salaries haven't really gone up that much. So one of the reasons why I bring up this graph is to speak to that person who's looking to buy. If you're looking to buy, make sure you don't get a 5-year term, because if you're looking in at 5 years, if you look at the last 10 years, this is the highest rate we've had in the last 10 years. So if you lock in at a rate of nowadays, I think most people for 5-year term, you're getting maybe somewhere around 5.5% interest. That would be the highest to lock in at. So I would be, and I'm not a mortgage broker, I'm a realtor, but speaking from an investment perspective and also being active in the market and, reading data, I'd say get maybe a 2-year fixed, or maybe I've seen in some cases, even myself included, go for a variable, because we know that in the foreseeable future, rates are not going to go up. Even if they do, it's not going to be comparable to locking in at 5%. The amount of fees and interest that you'll pay is not going to be comparable to locking in at 5%. So as for inflation has been going up. You see the red line, that's a 2% targeted rate that the Bank of Canada likes to keep inflation at. But we went up to 8% in the last few months. And since then, inflation is coming down. We are now, as I was just saying, at 4.4%, but you can see that we just went up slightly. From what I've heard with experts, and even because I'm always tracking data, my background is economics, so I'm always interested to see what's happening in our economy. And one of the explanations for this is that they're saying that the hike in interest rate is catching up, and that in itself is causing the cost of living to go up. So they're saying that now that people are having to pay higher rates, then even the rents have gone up for, people like businesses that have loans are increasing their prices to be able to cover their cost of borrowing. So because of that, they're saying that this hike that we're seeing here, part of it is as a result of rates going up and businesses reacting as such. So if the trend keeps going up, like that is alarming, because that means the Bank of Canada could come back and raise rates. But from what they've said and from where the prediction is going, they're expecting that by June or July, we'll be at 3%. If that doesn't happen, it could cause them to step back in and raise rates. However, if things go as predicted, then we should be heading towards an environment where we go back to 2% inflation by 2024 and rates come down. And that is what we're hoping for. Anyway, this is a graph about prices, where prices are at. One thing I want to show you here is, this is a graph that I'm speaking to people who are looking to buy. Some of my clients have said, I'm going to wait for the market the market to crash or for prices to go down. Now what you've seen is that moment is behind us. So if you're someone who's waiting to buy something, and this data is for all of Ontario, but if we look at Guelph and if we look at Kitchener-Waterloo, Hamilton, that graph is very similar to this. So this data is representative of what's happening in our market. Prices are going up again. And as you can see, actually this up and down trend happens quite often in Ontario. As you can see here, it goes up and down. And this here is another one that's quite noticeable. This was in 2017 when prices started going up and all of a sudden they started coming down. So we see that that bubble was eliminated and then prices started going up gradually. So this is probably one of the reasons why I invest in real estate, because even though we have fluctuations, the long-term trend is upwards. So for people who are saying, real estate will crash, it's crashed, the market has corrected, the bubble has been eliminated. Now this is the time for those people who are waiting to buy and get good deals. This is the time. One of the reasons why I'm saying this is such a unique time is because it's that time when things are trending upwards, which means it's a good market for a seller to be able to get a reasonable price. Now, I've seen homes that have sold for what they would have sold for last year of like when the market was at the peak, in 2022 February. But I'm also seeing homes that are selling for slightly less. What the difference maker here is, if you're a seller and you're looking to sell, the homes that are selling right now and selling for top dollar are homes that show really well. So before we go to market, we have to make sure that your home shows well. If you're working with a realtor, most realtors know this by now, but if they don't know, at least I want you to know that if you're looking to sell in this market, you want to net the most amount of money, strategy and presentation is number one. We are in a place where buyers are comfortable to pay a good price for a home that they really love. And we're also in a place where, since prices have come down significantly, you can come up with a strategy where you sell for a market. Let's say this client of mine who sold for 1.8, compared to where prices were in February of 2022, they could have sold for, let's say, around 1.9. 1.9 is where, like, the peak of the market, they would have gone in 1.9. They didn't get 1.9, they got 1.8. But on the purchase, they got something for 1.4 that could have sold for around 1.8 at the peak of the market. So it's like they sold for 1.8, they lost 100,000, but they made 400,000 on the purchase. So it's the things like that that we have to think about. If you're selling and buying, don't get stuck on this price. We have people who are like, oh, I can't lose a dime on my home. But I'm like, is it about the dime that you're losing on your home, or is it what you could potentially make? What if on the purchase, like if indeed, prices have gone down like we've seen in the graph and there's a correction, What if we can strategize such that by selling your home at a slightly lower price, we can set you up, especially for those who are upsizing. This is such a good, and also those who are looking to move to rural properties, because right now rural homes and the market there hasn't recovered as much. So basically what I'm trying to say here is, instead of just looking at the picture of this is what I want to get, let's look at the full picture and say, how can we net you the best case scenario? Because if we wait right now for the market to go back up to where it should be, 1.9, and you sell a 1.9 home to buy another one at 1.9, I don't know if that's a better situation versus selling a 1.9 and buying a 1.5. I mean, selling a 1.8, buying a 1.5. Like, these are things that we have to work with to see where the market is going. And as I just said, we're in a market that's very unique, where things are actually moving. And depending on the kind of property you have and how it's marketed, the demand is very high. An example here of homes that are very high in demand, for example, is student rentals. It's been so challenging for people to find a student rental for their child. So a lot of parents are choosing to buy. How you market your home, you have to work with somebody who knows the market, who can market your home the right way, to the right demographic. And once it sells, then you can go on to find something great. For sellers who are looking to sell and sit on their money, I would probably say this is not the time. I've had clients who come to me and I've told them, just wait. Like, if you're just selling to exit the market, please don't exit at the lowest. Like right now, as you can see, the data shows this is not a good time to sell if you don't plan on purchasing something else, or if you don't have a better plan for the money. If you're from an investment perspective, unless you have a family situation, you don't care about the numbers, then that makes sense. However, if you care about the numbers, this is not a time to sell and put the money in the bank or just sit on it. You're better off then, in that case, if you're not planning to buy anything else, you're better off waiting for the market to recover fully, and then you can sell. However, for those who are looking to sell and buy, this is a good time. Now, for people who have nothing to sell, they just want to buy, I'm gonna say that right now is probably the time to do so. Maybe even a few months ago would have been a better time, like right around here, like anywhere around here. Like, it was incredible the amount of deals we were getting in January. I'm gonna say maybe even November, December, January. It was incredible, like literally almost unheard of. Every single deal we're seeing in the market. Like, if you're working with somebody who knows what they're doing, most people were picking up deals that are unbelievable. I have a client who bought a property. It's a single family home, but it's set up to be able to, it's easily convertible to a duplex. And that's what my client's going to do. Those homes, I have one home like that appraised for 900 about maybe 7 months ago. It appraised for 900. Everything is the same. It's a bungalow with another unit in the basement, 900 in Guelph. My client picked it up for 680. And now she's converting it to be a legal unit, and she will rent both of them out. Can you imagine? Like, that is, for a buyer, a window of opportunity. We just had a great window of opportunity, but I would say it's closing, because with the way activity is picking up, you can see prices already going up, and rates haven't even gone down yet. So imagine what will happen if rates go down. And I've had clients who are waiting for rates to go down. I understand where you're coming from. However, if you look at numbers, if prices are already going up and rates are still high, imagine what will happen if the Bank of Canada comes tomorrow and they decide to lower rates by, let's say, a percentage. The market will be crazy. Like, all those opportunities we've been seeing, they'll be very, very few and far between. So if you're a buyer looking to buy, I'd say consider getting into the market now. Now, in terms of homes on market and the amount of inventory that we have, you'll see a lot of people say, oh, the market has crashed, we have so many homes on market. while that is somewhat true, but I want you to see and compare to what we're used to. Like if we look at a 10-year trend, you see actually that this is so you see fluctuation. Usually we have the least amount of homes on market in December. And then of course, as time goes, come to market. And here at the peak, this is around June, July. In June, July, you have the most amount of homes on market, and they start to drop again up until December. So this is the seasonality that we're seeing. And at the bottom here, this is December. At the top, this is June. So if you see here, this is what we had in 2021 and 2022. Very, very low number of inventory. And this is why we had the competition and the, what we were seeing, the crazy bidding war. That is why, because the number of inventory, look at the peak was much lower than, some of the lows of, 2020, 2019, and 2018. So what we're seeing right now is a little bit of like the market going back to normal. However, what I'm also seeing, and also as I'm tracking data, is that even though we have such high inventory market, it's not as high compared to pre-pandemic number of inventory that we have. Like if you see here, we still have low inventory really. Like this is probably the point where the pandemic happened, right here. And you can see that low inventory has continued as a trend, even though here we're supposed, we believe to have had high levels of inventory, but it's nothing compared to pre-pandemic levels. So this is, again, as I said, it's good news. It's like somewhere in the between, right? Where it's kind of a sort of balance, not a balanced market as the way it would be defined in the books. In the books, what they define as a balanced market, we've never seen in Canada. It's basically a market where a home sits on market for 4 months. We've never had that. Like the average number of days sales, like that hasn't been the case. However, when we look at our market and what we're used to, the market we have right now, our inventory levels are not too low, but not too high either. So as a seller or as a buyer, you still have room to be able to, go in there with a goal and accomplish it. This is, I feel, for me, it's not a low inventory market like we had in December, where buyers had to like literally, spend more than their budget just to get the home they need. That is not the situation anymore. However, we're also still in the market where the seller can still sell. So I really see this as actually a good opportunity for people who know what they're doing, people who have good skill set and they are determined to get what they want. This is a market where you can strategize and go in the market and be able to achieve whatever goals you have. So I really actually like this market. Let's see if you have any questions. So are there any questions? From a data perspective, let me see. Okay, so we have a question here, and someone is asking, is this a good time to buy? I believe, like with what I just said, I answered that question. If you're looking to buy, this is absolutely a good time. For investors, I'm going to tell you a secret, investors. This is what investors are doing. My friends, myself included, this is what we're doing. Right now, interest rates are high. We understand that. However, what we're doing right now is buying properties with very good profit margins. What I mean by that is going in for property and paying less than market value. If you pay, let's say, 300,000 less than market value, and these sound like big numbers, but it's true. These are deals that are happening in the market where people are getting 200, 300,000 under market value. So in that situation, we're in a market that's going upwards. The trend is trending upwards. So it's only going to get better from there. But what we're doing right now, we know with the situation with rates, it's very, very unlikely that you have positive cash flow. And in most cases, what a lot of my clients are getting properties that have at least 2 units. So then you have a better chance of covering all your expenses. but you won't get good cash flow. That is okay because it's temporary. That is where we're going in and taking, short-term terms, like let's say fixed terms, or you can even go for variable, just so you can go through this year. And then in the next 12 months, according to what the Bank of Canada has been saying, it's believed that interest rates will come down, and that is where you would cash flow. And as soon as interest rates come down, you'll see these prices shoot up. And as an investor, that's why a lot of them right now, they're picking up deals. If you wonder, for me as an investor, this is how I look at things. It's not about the timing of the market. It's good. I love knowing the market. I love knowing what's happening. I love knowing what prices are at. It's good to be aware. But when I'm looking to buy, I look at the deal criteria. So if a deal right now in a market that, deals are easier to find, then I tighten my criteria. Maybe if I was okay with, buying a deal at, let's say, 80% of market value, now I'm going to push it to like, can I get something at 65% market value? So then you tighten the deal criteria, and that is how you're able to buy things, pick up, and you have to define what that deal is for you. Keep in mind that for me, as an investor, when I'm looking at deals, the number one thing I'm looking at is the price I'm paying. So for sure, getting a good understanding of what that is, and then going out there and finding it. Excuse me while I get my phone, because some of the questions are coming on my phone. So, okay. So our home price is seeing an upward swing across Ontario. Yeah, so this data that you're seeing right here, this is Ontario data. And if you pull up all the different markets specifically, I looked at Guelph, I looked at Kitchener-Waterloo, I looked at Hamilton, because these are the markets that I'm very active in. And yes, all of them are trending upwards. Some of the curves will be flatter. Like for example, if you look at the market in Niagara, in London, you'll see that the curve is not as upward as this one is. It's probably a little bit, it's flatter. The rate at which prices are going up is going to be lower. Again, so one thing that I want also to bring to your attention is that right now we're saying it's a 10% drop compared to last year. When we were at the bottom here, we were about 30% drop in prices. So from here, like from the peak to the drop, this is about 30%. And we're seeing that we've already almost recovered the 20%. And now when we compare to a year ago, which is a year ago is probably somewhere maybe here, we're saying that we're only under by 10%. So for people who bought a home last year, they're only, they've only lost about 10% of their equity. And the trend is trending upward. What I always tell people, especially I've had people who've come to me and say, should I sell now? It always depends on what you're going through. If you're just selling because you're afraid of what the market is doing, that time is gone. We can see right now the market is recovering. So for those who are selling out of fear of what could happen next, I'd say just hold your property, things will be fine. Okay, so I'm just going through the questions here. Let's see a question. First-time home buyers. Okay, so I have a question here from a first-time home buyer. And you have good credit and you have good income. I would say, yeah, I think step number one is definitely to connect with a mortgage broker to see what you can qualify for. Because one thing that's happened with high rates is that the stress test has also gone up. And what that means is maybe what you qualify for is going to be lower than what you could have qualified for before. But I would say connect with a mortgage broker and get in the market. Honestly, I don't know if I can stress this enough. You see that the trend is going upward. That to me signals that things are getting better and people have confidence to buy. And I think for me, what even surprises me is that rates haven't even gone down yet, And if this is happening when rates haven't even gone down, what will happen if rates go down? Because right now, I know of a lot of people, even some of them, my clients, who've been waiting for the right time. We have a big chunk of the population who they've wanted to move, but they haven't. Some of them is because maybe at one point they put the house on the market and it didn't sell. Or maybe, something happened, they were afraid of COVID. They have reasons that have prevented them from moving. So as soon as rates go down and people feel more comfortable to make these moves, as soon as prices are at the level where people feel comfortable to sell again, I feel like the market will get busy again, and that time is coming. So if you want to avoid that bidding war and that the environment we had a year ago at the peak, I would say buy something sooner. In fact, maybe, I don't like to look back or regret or anything, but I'm saying if you're looking at the bottom is actually here, it's gone. And I feel like a lot of the times with real estate, you just have to pull the trigger. Because why? We don't know when the bottom is until it's behind us. When we were in January, we didn't know that January was the bottom. But look, now we can see, because now we're in April, we can look back and recognize this to be the bottom. So I would say, if you're looking to buy, find out what you can afford and get in the market. Because as you can see here, like if you're looking at a curve, usually when the market recovers, it just trends upwards. And if you couldn't buy here at the bottom, it becomes even harder to buy because it just gets more expensive over time. Okay, let me see the more questions that are coming in. Alrighty, so I have a question here. Do you anticipate prices to reach the COVID high prices in 2024? Do I expect the market to recover to this point by 2024? That's a good question. I think that this will likely happen if rates go down. And they don't even have to go down to 0, but if rates go down to like 2%, because right now we are, I don't know, so right now in 2023 and prices are going up. Usually from a seasonality perspective, I noticed the prices usually go up until June. If you're looking for a window to buy, June, July, August is a good time to buy because a lot of people are away, maybe some families are on vacation. So the competition there is usually less. And then September, things pick up again. So if you see some of these curves, like where you see like an uptick, that's probably like, the highest one, this is probably like December, and then, January, and then starts going up again. So I would say that, do I see prices going back to this level, the peak? Yes, I do. I don't know how fast it will take, but I know for sure if rates come down, prices will shoot back up. Like, look how fast it's going. Like, this is only, like, it started going up. February was, I think, the first month that we saw an uptick. And look, March, and now this is April. Look at April. Like, look how fast February jumped, and then April jumped. March was a little bit slow, but then April jumped upward. So, and I think May will be really busy because being in the market right now, we're only mid-May. And because I'm always in the market every day, I can tell you that expect another uptick in May because that's what we're seeing, right? Some of my clients, like even selling their home, I told you of a home that listed for 1.5, it sold for 1.8. So people are still comfortable right now. They're being comfortable enough to give that 300,000 over asking. And that is something we haven't seen in the last 9 months. As soon as prices started dropping, people would give like, even we would have like multiple offers, maybe 7, 10 offers, and we would see people give around asking, even though there's 10 offers, the highest will be around asking. But now, with most of those offers, we had, I think, maybe 8 offers, and most of them were way over asking. So people are coming back, and that mentality of overbidding and giving more is coming back. Okay. And I'm not saying this to scare anybody or to put a sense of urgency. I'm just saying the truth. This is data. Data speaks to us. It's a good time to buy, but I don't want to create a sense of fear or anything. That's not the goal of this conversation. This is just to be honest and talk about what's happening in the market. What I'm seeing right now, even though for the month of May, what I'm seeing and what I'm talking about, you'll see it in the data. So I'm not saying it to scare anybody. I'm just saying what the data is saying and me being active in the market and what I'm seeing. So for the month of May, for sure, expect to see the uptick in prices. Alrighty, so another question. Bought a home in 2022 and have saved up 100,000. My family income has gone up. Should I buy an investment property? So if you bought a home in 2022, that was at the height of the market. You have money saved up, which is really good. And you have a high family income. Should I buy an investment property or should I build some equity? I think that this is something more specific. I think that for me to be able to answer this question, I'd have to meet with you in person and also look at other things like, if you have any debt, because that's something that we also have to look into. How are you feeling? Are you feeling comfortable? Because I know some people in these times they're finding it hard to keep up with their payments. So I don't want to put you in a position where you feel stretched. However, if you have excess money and you are looking to invest it, I'd say real estate right now is a good time to buy real estate because you're buying at the bottom of the market and things are going upward. So yes, investing in real estate right now is a good idea. In fact, it's probably one of the best investments. However, because rates are so high, everything is so expensive, I wouldn't want you to put you in a position where you're stretched. So I would say, let's connect, let's get you to meet a mortgage broker, and let's look at your situation. If indeed you can afford to buy something without stretching your budget, I think it's a good idea because we know, as I say, that the market is going upward, and this is a good sign. I have children. Which area would you suggest I buy? Which area is better for schools, Kitchener-Waterloo or Guelph? So I think both cities have good schools. I personally live in Guelph and I love it here. And I also used to live in Kitchener-Waterloo because I did my master's at Laurier. So I used to live there. In fact, the first few years of our investment career, we lived in Kitchener-Waterloo. So both areas really do have good schools. They have a mix of private and public and Catholic schools. Like they have a good mix of schools. Maybe what I'll talk to you about is neighborhoods. So I would say, connect with me. We can talk about why Guelph and why Waterloo. Most people like Guelph because it's closer to GTA, like if you're commuting, but also it depends on where you are in Kitchener. Like if you are in Dune South, you're right on 401, so it might be quicker. If you're in Cambridge, you're right on 401, so it might be quicker to go to GTA. I think I'd have to look at everything else that's happening before I recommend a city, but also remember within a city depends on the neighborhood. You could be in a neighborhood that is closer to where you want to be, and you could also be in a neighborhood that's closer to the school that you want to be. Both cities have good schools. Okay. So, a question here. I guess I'm interpreting it. It's like, bullet points, but the way I'm reading the question is, what is the best investment property? Is it pre-construction or resale? This is a good question. I will tell you why. Basically the question is like, should I buy pre-construction or should I buy resale? I'll tell you what I'm seeing, okay? And I am one of those people that I bought pre-construction, I bought resale. I can basically speak from both sides. What I'm seeing right now with builders is, see this drop that has happened with prices? Good number of, like a good chunk of builders, they're still selling their pre-construction at these prices, the 2022 prices. Go around, ask them, if you want to do your own research just to see how it turns out, Find out what builders are selling their homes for compared to what they sold them for in 2022 when the market was at the peak. You'll find out that a lot of builders are still selling their inventory at 2022 prices. So if you buy a home with a builder right now, guaranteed you're overpaying by at least 20%. I'm telling you, this is the truth. How do I know? Because I'm always looking at the market. I love looking at data. You can, I know some builders are giving terms that are favorable and things that are like, just to make you feel like you're getting a deal. The truth is builders are business people. They're businessmen and women. They have numbers to meet. They have inventory to sell and they want to make a profit. If you buy a pre-construction right now, just be extra careful. Be like really, really careful. Make sure you've run your numbers, you've looked at comparables. And listen, when you're negotiating with a builder, you have to remember that these people know the market better than you do. And in most cases, most builders won't even negotiate. So if you're gonna buy pre-construction right now, be careful. There are very few situations where you can get a deal with the builder, but it's very rare. I know builders right now who are giving incentives. I know a builder who's giving a guaranteed 2% interest rate if you buy their home, their overpriced home. So they're selling overpriced homes where you have to pay like 20% above market value, but in exchange, you get a guarantee rate that's gonna start 18 months from now, 2%. Listen, let's look at the numbers. This home that you're buying with a guarantee for 2% interest is gonna close in 18 months. In 18 months from now, the interest rate situation will be so different. If indeed what the Bank of Canada is saying and what they're predicting is right, rates will have come down. Why do you want a builder to guarantee that? And then you're paying 20% more than you should. Right now, some of the builders are selling these homes, like for example, home that sells, if you buy a home from a builder, let's say for example, detached home for 2 million, or even let's say $1 million, just slap off a better number. Anyway, just know that you can get the same home on market today for 20% less. The problem with buying a new build is that the builder holds the power. They tell you what they'll give you, not the other way around. When you're looking in the market, you're looking for opportunities. You're looking for places where you can add value. You're looking for that motivated seller. Builders, they may be a little bit motivated to sell, but they're not the ideal motivated seller we're talking about. So to answer this question, you can see, I guess, the amount of passion that I have in me, because I see people get ripped off all the time. Listen, I've bought pre-construction before. I'm not saying it's a bad investment. In the past, where the market is going up, it's been a good, it's been a good investment. I've bought some pre-construction myself. Last year, had 2 pre-construction that I bought. Actually, I bought them in 2020. But what I'm saying right now is, pay attention to this. Builders are still selling their inventory at 2022 prices. And part of the reason why they do that is because if they're selling homes in a subdivision and they sold this home to Mr. Smith at 2 million, if they sell it at 1.8 to somebody else, that looks bad on them. So a lot of the times they'll find ways, they'll give you free things, they'll give you, free appliances, they'll give you, upgrade, finished basement, things, they'll give you those free upgrades. But when you look at it, when you look at the numbers, you're still overpaying compared to buying something. In fact, an opportunity right now, I'll tell you where the opportunity is. If you want a new home, buy homes that just got completed. We have people who bought these homes 18 months ago, paid top dollar, but they paid top dollar using 18 months ago interest rates. Back then rates were at 2%, overnight rate was 0. So they were saying, oh, I can afford this one because the monthly payment is going to be, let's say, $3,000 a month. Now today they go to close and the home, first of all, it does not appraise. So they have to take maybe a private mortgage, or they have to take a B lender with a higher rate. And rates are much higher. So most people can't hold these homes. You'll see in most of these new neighborhoods. I happen to live in a new neighborhood. You'll see a lot of people with, empty homes, vacant homes, or sign on the loan, they're looking to sell. Some of them is because the cost they estimated 2 years ago when they bought those homes is not the cost they're getting right now as they close on these homes. So you might be able to get a motivated seller who's going to sell it to you for like whatever, so they can just, you know, be done with it and go. I even have clients right now who are in that same position. You know, they bought properties, you know, thinking that their monthly payment will be 3,000, and now their monthly payment is 7,000, and they have to get rid of them. If you are a buyer, that could be a window of opportunity. But don't buy from a builder, because if you buy from a builder, you're overpaying. If you're gonna buy from a builder, do your due diligence. I hope that answers your question. The next question. Do you have any experience with student rentals? Are they easy to maintain? So yes, I do have some experience with student rentals, and I did run a few webinars on buying student rentals. So that is something that we can talk about. And just like I said earlier, right now there's a shortage of student rentals in Guelph and Kitchener-Waterloo as well. And the reason for that is because the universities have increased their student body. So for example, in Guelph, pre-pandemic, they had about 20,000 students on that campus. And now this year, they have 25,000 students. So they've increased their student body by 5,000. Because of that, there's a shortage of housing for student rentals. Guess what, right now, the average room in Guelph for student rental rents for $1,000. $1,000 for a room in Guelph. 3 years ago, it was around $550, $600. Can you imagine? Like, that's insane. So if you are looking to get into the student rental business, please let me know. We can connect, we can talk about it. I have a model that I use for my rentals or rented to students that is fail-proof. Like literally you cannot, it's such a good model that I've shared with my clients. Some of them have used it, but it's such a good model that nets you more and yet keeps your property nice and clean. And the property, I mean, the students don't damage it. So please let me know if that's you, you're looking to learn more about student rentals. That is also a topic that I'm very passionate about. We can chat about it and I can guide you and I can show you what I'm doing with my student rentals. Are they easy to maintain? It depends. If you use the strategy that I use, you'll find it quite easy. But if you just pick up a little, you know, beat up home, make it a student rental, I don't know. Yeah, you have to, you basically have to pick a strategy, you have to stick to it. So I have a question here. So this person who was asking about pre-construction, they're talking about GTA. So book the pre-construction in GTA and the comps is almost the same in the neighborhood. There are situations where, you know, what I'm saying right now about pre-construction, it's not 100, like there's no rule that is always right 100%. But I'm saying on average, builders are overselling things. If you got a good deal with a builder, I'm happy for you, that is great. But I'm saying what I'm seeing right now in the market, if you go out there, you'll see what I'm saying. Builders, like they have numbers that they have to meet. They have profit to make. Anyway, maybe we can have this conversation one-on-one. But if you got a good deal, I'm happy for you. That is good. But that is not what we're seeing with builders. Okay. Let me see what next question we have. And I have a comment here for someone who's saying, read agreements carefully before you sign. That is good. That is actually correct. Before you sign those builder agreements, always get your lawyer to review them. That is what I do. Make sure that, you know, the most lawyers will, and you know what, get a good lawyer who's not just gonna read that, yeah, everything is pretty typical, because I've had that happen to me before, where the lawyer read everything like, yeah, it's pretty typical. I didn't feel good, so I took it to another lawyer and they were able to find things that I need to understand, you know. I don't mind signing, I want to sign something I understand. So before you sign those builder agreements, please always get a lawyer to review them and get a lawyer who's going to do a good job, tell you some of the loopholes that the builders will put in, so that at least when you're signing, you know what you're signing. And sometimes you might also, especially in a market like this, you might be able to go back and renegotiate those terms if you don't agree to them. Okay. Alrighty, so let me see. I have 2 more questions here, and hopefully, because it's getting close, we're at 7:53. Do I know any good property management company? Yes, and it depends on the city that you're in. We do have some property management companies that we work with that I can recommend, but again, as I said, it depends on the city. So if you have a city in mind, please let me know. I can connect you with some really good people in the various cities that we've been in. My own portfolio, we manage our thing. Like my husband and I manage our properties. And the reason we do that is because we've always done it that way. If you speak to the real estate gurus, they tell you to hire a property manager, but I feel like I take advice and I customize it to myself. And I think that when we customize that advice to us, it made more sense for us to manage our own portfolio because, you know, we care about our homes, we love our tenants, we have a good relationship with them, we've never had any problems. Like literally you hear all kinds of horror stories, but we've never had a problem. And I think part of it is because we find really, really good people and we give them good homes and we treat them well. So we have such a good relationship. And I feel like I'm not ready to give that to another agency. Like I'm not ready to give that to somebody else. I feel like right now what we have is working and we're not going to change it. And as I said, like the motto is we find great people. When we screen tenants, we screen as if they're getting a mortgage. Like they have to be that good. We find great people, great properties, we treat them well, and we have a long-term relationship. And yeah, that's basically what we do. However, if you're looking to hire a property manager, there's nothing wrong with that as well. It frees up a lot of time for you and you can focus on, you know, doing your full-time job. So I understand that. But if you need a property manager, let me know and I can connect you with somebody. I think I've answered all the questions really. And that brings us to 7:55, which is a good time to end the webinar. If you had any questions I didn't get a chance to speak to, please let me know. My contact information is right here. Actually, okay, so this is my contact information and I have my phone number. This is my social media handle. And we also have a YouTube channel where we post most of the webinars we've had in the past. If you have any questions, do feel free to reach out to me. And I love speaking to people who are looking to, you know, learn more about this market as well. I've had people who are in GTA and they want to learn more about Kitchener-Waterloo Guelph. Let me know, connect with me, and I'd be happy to have that conversation with you. Other than that, thank you very much for coming to this webinar. This has been great. I love all the questions that are being asked. I feel like I'm having conversations one-on-one with you guys, which is something that I really like. This is why I do these webinars, to educate people, because for me to get where I am is because I also took time to learn things. So if I can impart some of that learning that I've had in the last few years, it's always a pleasure for me to do that. So thank you very much for coming to this webinar. Once again, this is being recorded and the recording will be sent out. And hopefully if you have any questions, you reach out and we'll take it from there. Thanks again and have a wonderful evening. Thank you for coming. Bye.